Hello, everyone. Welcome to Franchise Focus. I am your host, Lisa Linkowski, and I am a certified franchise consultant. And I have Franchise Focus is a TV show that is all about highlighting people that are experts in the franchise world. And so today, I have with me via Zoom out in Fort Worth, Texas, Tera Thomas, who is a senior funding consultant with Fran Fund. And Tera, how are you today?
I am very good, Lisa. Thank you for having me today.
No, really excited to have you, Tera. We have been having quite the year together, and I am delighted to have you with me. So Tera, tell me about Fran Fund. How long have you been with, what is Fran? Let's start with what is Fran Fund for the audience.
Sure. So Fran Fund is a funding provider. We offer clients strong funding solutions. As you mentioned, Fran Fund is based in Fort Worth, Texas. For anybody that may be familiar or visited, we're right in Sundance Square. And we were founded by somebody who is a veteran in the franchise industry. So they've owned franchises, they've done franchise development. And they just saw that there was a niche that wasn't really being catered to. And knowing that it's difficult to find funding for business ownership. While there's been other funding providers that have offered SBA lending consultation services, which we're going to talk about, and the 401k rollover ROB strategy that we're also going to talk about today, there wasn't really any providers that were doing both under the same roof. So basically we've started and we've been doing this now for about 17 years and just really excited to continue to help small business owners get the funding they need to get their doors open.
Excellent. And 17 years. And of course, we have the whole lovely pandemic that you guys were struggling with and trying to churn out these business loans for small business owners. And yet you were able to come through that, even though it was every conceivable challenge that you could think of, right? But you guys worked tirelessly to help these people get funding. Tell me a little bit about that. And how are things today compared to how they were?
Sure. So believe it or not, and it's something we're proud of, but it sounds weird. We actually had a record year through all of that. So there were a lot of people who, as everybody's aware, they were downsized, they were misplaced, they found themselves without a job or just exiting corporate America. And they were really ready to take their future into their own hands, right? They maybe weren't interested in getting back to work or corporate America. They wanted to know that they're starting their own business and something that they felt might be recession proof or essential, something that they wanted to know that if this were to happen again, that they'd be able to continue to work. So we had a lot of people who were really interested in taking that next step that had considered business ownership maybe for years and finally kind of took that plunge. So we've continued to get loans funded, again, continuing to facilitate the 401k rollover. So it's been a really busy year. There were obviously a few slumps here and there just when people were preoccupied with other things, but overall it's been a really successful year.
It has been, and it is weird to say that it has been a record year, but the SBA has had the most applications, I think, in history. Is that correct?
Well, there were some incentives that were available this last year that we've never seen before. You pair that with existing business owners that were getting PPP loans and the EIDL loans. So banks have been overwhelmed with, all these types of different loan applications. So absolutely, with the PPP loans, they saw and funded more than they've done, in the last 10 years worth of time combined.
Right. And yeah, it is incredible. And the incentives are incredible. And they've all expired, I think, correct? They ended as of September?
That is ending, yes, in the end of September. As far as the 3 months being paid by the SBA, however, they are extending that they will be waiving some of the SBA guarantee fees or lessening them for certain loan amounts. So loans that are below 350, they are going to continue to waive the SBA guarantee fee for some time. So there's still some small amount of incentives out there to be had.
Wonderful and so needed. Every little bit counts when you're sitting there trying to become a business owner. And Tera, you mentioned that, there are so many different avenues that when I'm working with my candidates and, and I talk with them about their financials, I say, walk me through it like a real estate agent. Am I showing you a condo? Am I showing you a townhouse, a fixer-upper, a McMansion? Like, what is it that I'm showing you? And then from there, I need to understand, well, how much do you want to spend? And then how much do you want to take out as far as a loan? And you have various loan options that are available. And one of the ones that you and I have worked on quite a bit together is the ROBS program. Can you explain to the audience what that is?
Yeah, absolutely. So the 401k rollover or ROBS program, which stands for Rollover for Business Startup, it's actually not a loan. It's a funding vehicle that allows you to invest your retirement savings into a business without any income tax or early withdrawal penalties. So today, your retirement funds might be invested in Google or Apple or an index fund. This strategy allows you to invest them into your business. So in that strategy, you can't typically, there's certain retirement plans that can be used. Most employers don't allow you to roll out funds while still employed. So current employer plans are not a good fit for that. And then very specifically, Roth IRAs are not a good fit for that strategy. But if you have an old 401k, 403b, a 457, maybe you work for the government or you were in the military and you have a TSP or thrift savings plan, or you put all of those into a rollover IRA. Those are all retirement vehicles that can be used for this strategy. So basically, again, you're investing your money into your own business. You have that money to use to pay franchise fees, marketing expenses, payroll for employees, including themselves. In this strategy, the 401k plan is the shareholder of their corporation. So many of our clients have actually found that using that strategy, they're able to get a better return on investment than they would in the traditional market. This can be paired with an SBA loan or for the cash injection for an SBA loan, but we have a lot of clients who choose to use a strategy to self-fund their business. In that aspect, they don't have any overhead of a monthly loan payment, and their business is able to cash flow faster. So there's some really great advantages of using that strategy, not to mention that it's also the fastest means to funding, as that strategy only takes about 3 to 4 weeks for us to go through all of those steps and get access to their funds.
Of course you're absolutely correct, because you're the expert in this. And, when I first talk to candidates about, the ROBS program, their initial concern is, I don't want to touch my retirement. And I say to them, this is diversifying. You're literally just diversifying a part of your portfolio, because you're never taking all of it, right? You're only going to take a portion of it. And then you get to use this now toward, like you said, self-funding your business. And we don't know what's happening with the market. The last couple days have been wobbly, and the next couple days could be on a high, but you don't know from day to day. So you take a portion of that, take it out of there, and now it's used in conjunction, like you said, with some other lending, or they can self-fund the whole thing, which has happened with a few of my candidates. And so it's a great alternative that people can look at, and FranFund does an exceptional job with this and explaining it and working with everyone to understand what's needed and the timing. Because when you look at an SBA loan and how long that's taking to close versus doing this with the ROBS program, you can cut down some of that time.
Absolutely. And, I get a lot of that same feedback, Lisa, and I understand it because we've all been told and taught not to touch our retirement. The first time I heard of the strategy after I was a small business owner and a franchisee, I hadn't heard of the program, and I thought the same thing. And while I agree with that, I'm not asking anybody or telling anybody that they should take a distribution or use this money to take a trip or put a roof on their house. It's still an investment. They're just choosing to invest the money into their own business. We have had people, like I said, we facilitate this program for a minimum of $50,000 worth of an investment, because with the fees associated with it long term, that's where it starts to make sense for our candidates. And we facilitated this up to $1 million. So the client does have the ability to use whatever amount they have in those 401k retirement IRA plans. So again, it can be a mix. You can self-fund. There's a lot of great advantages to using that program. And a lot of my clients that use it are debt averse, like I am. I don't like to carry debt. I don't like to pay interest and fees. So it's a really great strategy for some, while others may want to borrow, or some just don't have the retirement savings in order to utilize that program specifically.
And you made a good point earlier that you cannot use a 401k for an existing employer. But what happens if you have a candidate that is working right now and they're planning to exit their company? Is there a way for them to still utilize that?
Typically, they would just need to call the custodian or their HR department and find out how quickly they can access those funds after they separate. So typically, once they were to leave that employer, it would open those funds up and make them available.
Excellent point. So we've talked about the ROBS program, which is just a great alternative. And then you have the SBA, the Small Business Administration. They have various loans. Can you walk us through what some of those options are?
Yeah, absolutely. So there's a couple of different loans we see being used for startups today. One is what's referred to as an SBA Express loan. And that's a term that was really kind of made up by franchising, but we use it for service-based businesses that a borrower can operate that business likely from their home or a very small office space. That type of loan is going to max out at $150,000 borrowed, and today cannot be used to fund any type of brick and mortar build out or construction. So again, that's why it's really geared towards service-based businesses. And I'd be happy to talk through any loan qualifications or what we're seeing for that today. And then we also facilitate a traditional SBA 7A loan. Today, those loans are really starting at a minimum borrowed amount of $200,000 and can go all the way up to $5 million. So great for something that is equipment heavy, brick and mortar, where there's build out or construction. You're building some type of retail facility where your customers are going to come to you. That traditional 7A loan can be used for acquisitions as well. So we help with acquisitions. Express loans are also great for additional working capital for somebody that maybe already has an existing business and they're looking to expand.
And with the SBA Express, do you get to have working capital built into that as well?
Absolutely. They suggest that. So really part of what we do, Lisa, we're not a bank or a direct lending institution, but we have a team of folks in-house, and they focus their full-time efforts on helping our candidates to obtain those types of SBA loans. So when working with FranFund, we're going to provide you with business plan templates and templates for your financial projections and performas, all of the documentation that lenders will require. So we kind of have a nice red bow on it before we shop it to our network of lenders. And we've been able to educate them specifically on the franchise brands that we work with. So that's why it's a little bit more efficient and a less painful process than a borrower might expect if they were to work with a local bank.
And education is key in every facet when you're looking to own a business. We're going to take a quick break, Tara, and hear a word from our sponsors, and we'll pick this up right after the break.
So, I'm kind of new here, but I've noticed a trend. My human does this funny thing where she goes around and gets all my toys, and then she hides them in that basket by the door. But it's always the same basket, and it's always in the same place. And then she acts so surprised when I find them, but, she's putting them in the same basket. Again. It's like, hello, that's where you put it last time. You were the worst at hide and go seek.
And welcome back to Franchise Focus. I'm your host, Lisa Lankowski, and very happy to have with me Tera Thomas. We were just getting into all the different types of loans that there are that the SBA offers, and we talked about the express loan, and then we talked about the regular SBA loan that can go up to $5 million. Tera, walk us through the qualifications and the checklist that you work with when you're talking to your clients.
Sure. So at a really high level, Lisa, the bank's going to be looking at a number of factors when they're evaluating a small business loan request, and all of them are equally as important. The first thing they're always going to look at is a category of credit for the borrower. So they want to see a minimum credit score of about 680. They like to see that the borrower hasn't had any recent bankruptcies, foreclosures, or short sales. And, an unlimited or a limited amount of unsecured credit card debt. They just don't like to see that credit card debt is really high, maybe above $10,000 to $20,000 revolving. They also like to see that the borrower is bringing some equity and some skin in the game, because the bank is never going to lend a borrower 100% of what's needed to start a business. So first, let's talk about the equity injection for an SBA Express loan. Everything that you're going to read and hear and see is going to talk about 10% cash injection, and that is very attractive. So on this Express loan that's $150,000, that's only $15,000 that the lender will require. However, it usually costs more than that to get to the point where the bank is willing to release those funds to you. So they want to see that you have this checklist of items. This loan is really meant to be working capital. So in order for you to get your Express loan funded, you would need to have an executed franchise agreement, a certificate of completion of training. If there are any licenses that are required to operate that business in the state or the county, you have to have those prior to the loan being funded. If there's an office space required, it would require a lease agreement in hand. And if there are specific vehicles that are required. Today, Express lenders aren't covering vehicles, so there might need to be a deposit and some third-party financing in place prior to that loan being funded. So if the borrower has the ability to check off all of those items on the checklist for that $15,000, then that is great. But you can understand that it's typically more than that to get to the point where the bank is willing to release those funds. Now, that being said, the bank doesn't care how much the borrower is paying for their executed franchise agreement, but that they have one. So some franchisors are flexible. They're really familiar with how these SBA Express loans work. So they might allow for a deposit on that franchise fee, with the balance being paid once the loan is funded, while others will require the full franchise fee up front. So that's something we always talk through, that checklist of items. What is it going to cost to get to that point to know that the borrower has that cash? It's not unusual, and today we're seeing that Express lenders do want to see that the borrower has a minimum of $50,000 of cash left available to them after the cash injection goes into the business, just to make sure that there's a little additional cushion and that they're not putting every dollar into the business. That SBA 7A loan that starts out at $200,000 up to $5 million, they're typically going to want to see about a 20% cash injection. Again, the largest portion of that is typically coming from the borrower paying their franchise fee, maybe some deposits on signage or equipment. Now, all these loans, they do like to see that there's some outside income coming into the household to continue to cover expenses for the borrower while the business is getting off the ground and running. So they want to see that there's enough income to cover personal expenses, this new SBA loan payment, and the lease payment for the business, if there is one. If the business is something that they'll operate from their home, then obviously that kind of falls to the wayside. For Express, that's really it. One of the bigger differences on an Express versus an SBA 7A is that for that brick and mortar type of business where you're getting a higher loan amount, the bank is also going to want to see that the borrower use personal assets as collateral. And the first thing they're going to look at there, Lisa, is real estate. So what they're going to want to do is place a lien on the real estate that the borrower owns, or personal real estate, their home, or investment properties, maybe a vacation home. And they'll place a lien. Once the loan has been paid off, the lien will then be removed. So that equity in real estate becomes really important when somebody is looking to borrow for a brick and mortar or maybe an equipment heavy type of franchise.
incredible information and really just a wealth of knowledge, Tara. Thank you so much for going through all that. And I know it can be a little bit dense for our audience to kind of hear all this and their heads are maybe spinning a little bit, but trust me, when you're working with Tara, she makes it all very easy for you. And one of the things that I love about Fran Fund is their communication with my clients. Can you talk about that? How do you keep your, because you're working with people across the country, how do you keep your candidate, your clients engaged with understanding what's happening and where they are in the process, regardless of what the loan option is that they've used?
Sure. So I think that, we always start with the initial funding consultation is what we call it, where we're going to talk about what's the best fit for that person and their personal financial statement. Is it the ROBS program? Is it a loan? Is it a combination of the two? Are they looking at one territory, multiple territories? Should we consider a portfolio loan, unsecured credit? So even if it's not an option that we facilitate in-house, we want to make sure that it's meeting your, what you need to meet your long-term goals. So we offer a free pre-approval process if you're going through and looking at obtaining an SBA loan. It's not unusual, I'm sure, if you're working with Lisa or somebody like Lisa, you're going to find out that if you're having conversations with franchisors and you get to the point where you're attending a discovery day or confirmation day, they're going to want you to provide that pre-approval letter or your path to funding prior to participating. So we want to make sure to get that in your hands. So we'll check in with you regularly, depending on where my candidates are at in their process. It might be weekly, it might be bi-weekly, or sometimes even if they're waiting for some additional information from the franchisor, monthly. So really we just try to follow your lead, but just make sure that we are staying in constant contact, whether it's a check-in phone call, an email, scheduling follow-up calls. We just want to make sure that we're a resource to our clients as they move throughout the entire process.
And a resource you are, that is for sure. And one of the things that I've always heard and I've always passed along to you is that my candidates love that you guys aren't pushy, that you go on their schedule, just like I go on my candidate's schedule. You're going on their schedule, so everyone's just being very respectful and not sitting there, constantly on them, because there is so much going on and it can be very overwhelming. And so that's one of the reasons why I love working with you guys. That is for sure. So we talked about the timing for all of this. We've talked about the checklist. What are some mistakes that candidates make that could be avoided and that you see where it can almost just bring the whole entire, agreement to a complete grinding halt? What are some things that candidates, the mistakes that they make that could be avoided?
Sure. I think one of the biggest mistakes I see today is not having a funding conversation early enough in the process. So, you don't go and put an offer on a house until you make sure you're pre-approved for a mortgage. And it's kind of similar here. So it's never too early to have a funding conversation. It doesn't happen very often, especially if they're working with a consultant. Especially, I've never had it happen with any of your clients, Lisa, but I once in a while I'll get a web lead or something where they paid a franchise fee before knowing how they could get their funding, and they don't really have a means to get there. So making sure that you have a strong path for funding prior to paying any deposits, franchise fees, going through and talking with whether it's a funding provider like myself or a local bank or friends and family, but having that funding path in place before getting too far in conversations with franchisors. And then, if you are looking at an SBA loan and we've gotten you pre-approved or anybody's gotten you pre-approved, don't make any big changes. Don't go and get a lot of credit inquiries. So it's going to affect your credit, make any large purchases, or even go sell a house or something like that. Just make sure that if you have a pre-approval from any type of lender, funding provider, that everything is the same at that time, your income, credit score, assets, liabilities, as when you received that.
What happens with timing on a loan that you get your pre-approval and you're working and you lose your job? Will you lose your pre-approval?
It could affect your pre-approval for sure. So, it depends on if you're married, if your spouse has income. So the banks are going to look at, their debt to income ratio. They typically want to see that it's below 40 to 50%. So Express lenders are a little bit more flexible there. They're going to assume a small salary from this new business to help meet those debt to income requirements, where 7A lenders are not as flexible. So, if anything, if any of those life changes are to happen, we just ask that you tell us immediately so we can see if there's a way to work around it.
Communication is critical. It's
Yes,
critical in a
absolutely.
relationship. It's critical in this whole business dynamic. And so making sure to bring all of that information up front is very, very important. So one other quick question for you, Tera. What are the hot trends that you're seeing? Because I get asked all the time, what is it that you're seeing from your end on, working with your candidates? What are they most interested in?
As far as like concepts?
Yeah. As far as like the industries.
Sure. Yeah, I mean, it's really still a pretty large spread, and I hate to avoid answering the question. Last year, for service businesses have always been big. They've always been a big part of the businesses that were being funded. I think we saw a little bit more of an uptick of that last year. Again, with everything going on with the pandemic, people wanted to be able to work from home or a small office space. They wanted to get into those essential businesses that people still really had a need for. So, I mean, we did see a little bit of an uptick there, but we're still doing a lot of brick and mortar. So whether it is fitness, beauty, food, we're still doing a lot of that, as well as service-based businesses.
The economy continues to hum, and it's
Yes.
a large part to Fran Fund helping business owners secure their loans for their business ownership dreams. And in order to contact Tera, because she is fantastic, we have her contact information up here for you to review. Her website, her email, and her phone, all that good stuff is there for you. And Tera, this has been great. I thank you so much. I have really, really enjoyed working with you for this past year, and I continue to want to continue that on going forward. I know that the International Franchise Expo is coming up next week, and Fran Fund is going to be there. What is your booth number?
We will be there, so stop. I will not be there, but some of my other colleagues will, so stop and see us at booth 106.
Excellent. And Tera, it's been wonderful. I'll see you around soon talking with my candidates. And this is Franchise Focus. I'm your host, Lisa Lankowski. I thank you so much for tuning in. I am a franchise consultant with Milestone Franchising. You can learn all about me and what it is that I do to help you earn your dream of franchise business ownership at milestonefranchising.com. And this show airs every week on Friday at 1 o'clock Eastern Standard Time. And thank you so much for tuning in.